Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Taboola's latest proxy statement. It's not exactly a thriller, but stick around because buried in the details there are a few surprises, including some executive pay decisions that might make your jaw drop. This proxy statement is essentially Taboola's invitation to its shareholders for their annual meeting. Shareholders get to vote on important stuff like who sits on the board, how executives are paid, and who audits the books. Think of it as Taboola's version of American Idol, but with less singing and more spreadsheets. The key date is June 4, 2025, when shareholders will meet virtually, of course, to cast their votes. If you owned Taboola stock on April 14, 2025, you get a say. The board is urging shareholders to vote for all of its proposals. It's like they've already picked their favorite contestants and want you to agree. These proposals cover everything from re-electing a director to approving executive pay. The board wants you to rubber stamp their decisions, but it's your chance to voice your opinion. If you don't instruct your broker how to vote, they can't vote for some of the most important items like electing directors or approving executive compensation. Your broker can only vote on the reappointment of the accounting firm. Let's look at some financials. In 2024, Taboola's revenue was about $1.77 billion, up from $1.44 billion the year before. That's a pretty good jump. Gross profit also increased from $425.26 million to only about $3.8 million to only about $3.8 million. To only that $34.80 million to $200 fall. Though it narrowed significantly from about $82 million before interest, taxes, depreciation, and amortization. A metric they really like, nearly doubled from $98.7 million to only about $3.8 million to only about $3.8 million, to add to $44.2 million to only about $3.8 million. Deeper into this number's adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization. A metric they really like, nearly doubled from $98 million. Deeper into this numbers. Adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Time to talk about the boardroom shuffle. The company is restructuring its board, so the current board will be reduced from 9 members to 7 after the annual meeting. One Class I director, Accession, is up for re-election. He has been on the board since 2007. Mrs. Bigley and Claricio will remain directors through the annual meeting. To make sure the directors' interests are aligned with the shareholders, they're expected to own a good chunk of stock in the company, specifically 4 times their annual cash retainer fee. This encourages them to think like owners, not just employees. As of March 2025, each non-employee director exceeded this guideline. How much do these non-employee directors make? Well, in 2024, it varied. Zvi Limon, the chairman, made about $332 and $750. $750 like Deirdre. Bigley and Linda Claricio were in the $230,000 range. In addition to that cash, they all received stock awards valued at $190,000. Taboola has some interesting relationships with other companies. Yahoo is a major player for them. Revenues from Yahoo amounted to about $233.66 million in 2024, representing 13% of Taboola's total revenue, but it's a two-way street. Taboola also paid Yahoo about $275.5 million in what they call traffic acquisition costs. As part of share buyback agreement, they had another transaction with Yahoo. Let's take a quick look at employees. On the last day of 2024, they had about 2,000 employees. A large portion of the people who work at Taboola have been there for a couple of years or longer. Transparency and open communication is something Taboola emphasizes through regular all-hands meetings. Now, let's get to the juicy part, executive compensation. Taboola's philosophy is pay for performance, meaning executives get rewarded when the company does well. Key parts of the executive compensation are base salary, short-term incentives, and long-term incentives. Short-term incentives depend on 2 factors, adjusted EBITDA and what they call ex-TAC gross profit. Ex-TAC basically means exclude traffic acquisition costs. If the company hits target performance for these metrics, the executives get a bonus. A one-time long-term cash-based performance award from January 2023 would be earned based on a 2024 target for the company's adjusted free cash flow per share. The plan incentivized certain key executives for the Yahoo partnership. For 2024, all long-term equity incentive awards were made as time-based restricted share units, not linked to goals directly, meaning they vest over time. Taboola's founder and CEO Adam Singolda received over $6.6 million in equity based on the grant date fair value calculation. Stephen Walker, the CFO, came in second with over $3 million. Christy Sanjaya, Chief People Officer, got a discretionary cash bonus with a target of $300,000 for her work on the Yahoo deal. Based on the 93% performance calculation, she received $29,000. As of the end of 2024, Mr. Singolda still had almost 1 million stock options that were already exercisable, meaning he could buy those shares at a set price. Stephen Walker had over 270,000 such shares. However, they also each have hundreds of thousands of unvested shares, meaning that they haven't earned those shares yet. Now let's talk about the CEO pay ratio. The SEC requires companies to disclose how much the CEO makes compared to the median employee. For Taboola, the median employee made about $148,747. The CEO, Adam Singolda, made about $10.5 million. Tender ratio of 70-1. It may sound like a lot, but compared to many other companies, this is not that high. One of the key proposals shareholders are voting on is an amendment to Adam Singolda's compensation terms. They're asking to approve an increase to the maximum allowable annual equity grant. They want the flexibility to issue an equity grant that aligns with the company's compensation philosophy and market data. The audit committee basically gave the thumbs up to the financial statements to be included in the 2024 annual report. Another key vote is on the reappointment of the company's independent auditors, Kost Forer, Gabe and Kassira, a member of Ernst & Young Global. Finally, the proxy statement includes a reconciliation of non-GAAP measures. In the end of 2024, adjusted free cash flow was $140 million. And so what's my take? Taboola is at an interesting crossroads. They're growing revenue, but they're still not consistently profitable. Their future hinges on partnerships like the Yahoo deal and their ability to manage costs effectively. The high executive compensation, while tied to performance, might raise eyebrows for some shareholders. Are they truly rewarding exceptional leadership or just participating in the broader trend of runaway CEO pay? It looks like the compensation committee had to make a decision about setting the CEO's pay in line with the market levels, which would make the CEO happy and attract talent. A weakness for Taboola is its dependence on traffic acquisition costs. They're paying a lot to get people to their platform. Overall, Taboola is a company with potential, but they need to demonstrate they can turn revenue growth into consistent profitability. Keep an eye on their partnerships, cost management, and how they balance executive compensation with shareholder value. That's all for today's Corporate Decoder. If you found this breakdown helpful, please give us a like, drop a comment, and subscribe for more deep dives into the world of corporate filings. Thanks for watching.